welcome everyone. Delighted to be here, and delighted to be here with three very esteemed governors. As mentioned, the topic today is the role of central banks in the future economy, which is a very exciting and pertinent topic, and something I'm very passionate and interested by. What we'll do is do introductions to start with, and then we'll go into some key questions, and then hopefully at the end we'll have time for a nice Q&A. I'll start with myself very briefly. Jesse Gosnell, I am the co-founder and managing partner of Arch. We specialize in global fintech leadership and advisory services. So I spend most of my time interviewing founders, entrepreneurs, leaders of fintech businesses. And the topic of question for everyone at the moment is what is happening when we're looking east, what is happening specifically in the Middle East. And so I am particularly excited to be here and to be moderating this panel. Given the fact I spend most of my time talking to business leaders, it's particularly interesting to be now talking to policymakers. And so without further ado, I'll pass over first to Martin Galstein, who is the governor of the Central Bank of Armenia. And then I'll pass to Dr. Phil Nisi, who is the governor of the Central Bank of Eswatini, and then I'll pass to Guillermo Avalan, who is the governor of the Central Bank of Ecuador. Martin, introductions.
So, good morning, everyone, and it's great to be here in Dubai. I've just went through the list of the things that Dubai achieved so far, and that's incredibly interesting. It's a great honor to be here. As just mentioned, I'm the governor of the Central Bank of Armenia, a small, open economy situated in a very volatile region. That's why monetary policy making is a bit challenging task for us.
Good morning, everyone. Thank you, Jesse. I'm Phil Nisi, the governor of the Central Bank of Eswatini, the southern tip of Africa. We are a land-linked country bordered by South Africa and Mozambique, an open economy, part of a common monetary area. And the countries in the monetary area is South Africa, Lesotho, Namibia, and Eswatini. We are pegged to the rand. So being a very closed economy linked to South Africa, we tend to manage our monetary policy informed by this parity. And also the interdependency between the major economy being South Africa. And we have managed to keep inflation within below 5% and are growing the economy in the range of 5% as well. Thank you.
Good morning. My name is György. I'm the general manager of the Central Bank of Ecuador. On behalf of the Central Bank of Ecuador, I'm delighted to be here at the Dubai Fintech Summit. And have the possibility to share this panel with Governor Galstein and also with Governor Nisi. Thank you very much for your kind introduction, Jesse. Ecuador is a very particular case since the economy was dollarized in 2000. After reporting or experiencing the largest banking crisis in the history of the country in 1999. So during that crisis, our local currency, the sucre, was depreciated by around 500% between 1998 and 1999. So in the past 24 years, we have learned to manage the economy without a national currency. The dollarization regime has contributed to lay the foundation for economic growth and ensure price stability, which is one of our priorities at the Central Bank of Ecuador. In the past 3 years, we recovered the technical and managerial autonomy of the Central Bank of Ecuador, which has been essential in order to reach a new record on our international reserves. This liquidity level has enabled the Central Bank of Ecuador to strengthen our equity and also provide fiscal relief to the national government since a part of the net profits that we have achieved have been transferred to the Treasury. So I'm very glad to share with you this space since the economic relationship between Ecuador and the UAE has been passing through a very special moment since authorities from both nations are planning to sign a trade agreement very soon. So I believe it's a good opportunity also to discuss about a little bit trade. Thanks.
Very good. So like all great stories, we're going to start with a bit of history. So what we're going to do is take us back to the history of central banks and get an understanding about how they've changed to economic conditions, starting with the first central bank of England, Swedish Riksbank, and the evolution of central banks over time. Martin, maybe start here.
Okay, thank you. So I think the history of central banking goes back to 17th century, and as you mentioned, we had the first central banks like Riksbank, the Swedish National Bank, and the Bank of England, and their role primarily was to finance the governments, most of the time during the wartime, plus do the clearing and settlement business for the governments and being the lender of last resort. If we move things or roll things a bit further, we would see that at the beginning of 20th century, the Federal Reserve was somehow created, and then they were assigned to manage the peg or currency, which was pegged to the gold standard. And then they were doing things like providing also financial stability to the system. Then, fast forward, if we move to the stage when the World War II is over, and then in the United States they have these Great Society initiatives by Lyndon Johnson and some others, and then there is an overflow of money, and then Bretton Woods system is in place. Then we see the period of very high inflation, which was also associated with the oil price spike. That is Arthur Burns' time, late 70s and 80s. Then we have Paul Volcker disinflation period, when Paul Volcker increased the interest rates tremendously to fight the inflation. And then we arrived with a period of great moderation when, if we draw the parallels between political science and economics, you would hear many voices telling something which is very close to what Frank Fukuyama was telling about the end of history. So a lot of people were thinking that inflation is over and we are doomed to have very low and stable inflation for the rest of our lives, but it didn't turn out that way. So COVID, global financial crisis, then COVID, and a lot of government spending, and central banks start doing something which was not heard of or seen before. So they start expanding their balance sheet, they start printing money, some even try to execute something which is called helicopter money, which was giving out money and lavishly to the societies, to save the societies with a motto, which turned out to be a very controversial, because we end up with several years of extremely high inflation. And what we see now in the United States, in Europe, and many other developed countries is that central banks are not there yet to declare the victory over inflation. So if I try to keep it short, I think central banks are currently assigned with a mandate to be responsible for inflation. And many central banks after the global financial crisis are also assigned with a mandate to provide financial stability to the system.
And that's quite an interesting point, because actually one of the other things is that issue of independence, and how do you balance that focus on economic development and then inflation? And that always, then it can sort of feel as though those two things are slightly at odds. Phil, what are your thoughts there?
Thank you, Jessica. I think as Martin has said, the role of central bank has evolved and still remains core though. to the issue of price stability, which is ensuring that inflation is under control, there is no erosion of value for money, because by doing so, you're creating wealth, especially for the future. And this is something that we grappled with, especially during the financial crisis, and all central banks were seized with dealing with the issues of inflation, and Eswatini was not excluded in that scenario. We had to have accommodative monetary policy to ensure that we are stimulating growth, we are supporting our economies. The other one that is very crucial is financial stability, and the annexes between the two, financial and price stability, as we all saw, whilst monetary policy was very tightened, it has consequential effects on financial stability, with a number of financial institutions suffering in the process. So always balancing the two. And the other one, which is in the core, but it depends on what is being stressed at that particular point in time, is contributing to contributing to economic growth. In Eswatini, whilst we pursue price stability, focus on inflation, targeted inflation in the range of 3 to 6%, we also ensure financial stability, ensuring that our central banks are functional, and we are also looking at how do we support economic growth. Several initiatives, in particular, is financial inclusion, which we have been driving quite intensely and intentionally, currently sitting at about 87% of people accessing financial services. There's still room, especially for women participating in the economy, and also the disengaged communities like refugees who are not part of the economic activity. We are very intentional with this. And the other contribution to economic growth, whilst we maintain our mandate, is we run several schemes like small medium enterprise schemes, which are run by the central bank or collateralized by the central bank, and also export guarantee schemes. And all these are intended to ensure that we are contributing to economic growth. And then lastly, whilst central bank remains embedded in its mandate, we have to take into context the evolution, the changes that are happening, the fintech landscape that has come into being, because all these innovations in the fintech space are contributing to economic growth, and we are embracing that. And right now we are driving a domestic switch, which we are hoping to operationalize, create more connectivity, open banking, fast payment. All these things are intended to level the playing field and get more players so that there is growth in the economy. That's what we are doing at the moment. Thank you.
Guillermo, does that echo with your approach in Ecuador to how you think about inflation and balancing that out with economic pressures, or what aligns, what doesn't align there?
Well, in the case of Ecuador, the independence of the central bank has been essential in order to ensure price stability. We have learned from our experience that the dual mandate of full employment and price stability includes the important task of ensuring financial stability due to the financial crisis that we have experienced in our country. So right now, the Central Bank of Ecuador lacks of monetary tools in order to control inflation, since we are a dollarized economy. However, we have a very active research agenda on fiscal and trade policies that we provide and we offer to the National Assembly and also to the national government that could help to control and reduce inflation. It is important to highlight that the dollarization regime has contributed to ensure price stability in Ecuador. In the past 24 years, Ecuador has achieved one of the lowest inflation rates in the region, in Latin America, so which was not the case when we had our national currency. So we have recognized that we lost the flexibility of having a national currency, especially during recessions. However, for some countries that have a very complex political system, sometimes a national currency which it doesn't make too much sense from the economic point of view. Sometimes a national currency could be a threat instead of a beneficial tool. So that's what we have learned from in the past 24 years.
And is that very different to Armenia about how you think about the balance, given you're very independent?
So I think I'll start from the theoretical and practical literature on economics. And if you study the papers, you would find that there is a very high positive correlation between low and predictable inflation and economic growth. That's why the central banks are assigned with a mandate to provide low and predictable inflation, because when you create an environment where your economic agents trusting the central bank, and they know that they will have a nominal anchor in terms of inflation target, which central bank will provide, then that creates an environment when people want to invest. And as you know, the investment is the engine of the economic growth and productivity. So by providing low and predictable inflation through the mandate which is solely assigned to the central bank as an independent institution, we're providing a fertile ground for investments into the economy, which provides economic growth. So in that sense, I think there is no kind of a debate in our country about where the central bank stands and where the government stands. We're responsible for providing low and predictable inflation, and government is responsible to provide economic growth and productivity.
I think we got the foundations. Let's talk about Fintech, because it's the Dubai Fintech Summit. And obviously, it's on the agenda for all countries in different guises. It'd be interesting to understand, between the three of you, your approach to Fintech at its broader sense, but then more specifically, when we're thinking around digital assets into then cryptocurrencies, and how you think about differentiating that from other assets. Guillermo, what's your approach in Ecuador?
Well, first of all, in regard to digital payments, I believe that the central bank should have at least three priorities. The first one is to guarantee interoperability among the participants of the financial system. The second one is to implement cybersecurity tools to make sure that the transactions are completely secure. And the third one, which is also very important, is to make sure that there are affordable fees for clients. Yeah. These three goals will be very important in order to ensure a global or universal access to all citizens, and also to achieve a higher level of financial inclusion. In Ecuador, for instance, between 2019 and 2023, the electronic transfers have increased significantly. For instance, real-time payments managed by the private sector increased from around 10 million to almost 100 million in the past 4 years. Considering the level, the needs of the general public, the Central Bank of Ecuador will launch within the next 24 months a low-value instant payment system will lower the transaction times and costs, boost commerce, and foster financial inclusion nationwide. In regard to cryptocurrencies and more related to fintech, as I mentioned before, Ecuador is a dollarized economy since January 2000. So that means that we left behind our national currency, the sucre, after a large depreciation during the last 2 years of our national currency. In this context, we consider that it would be counterproductive to adopt a cryptocurrency as a legal tender. since they have shown a very high volatility. There are some cryptocurrencies, for instance, that has lost 88% of its value just in 2 months. On the other hand, between March 2024, between January and March 2024, some cryptocurrencies had 85% increase compared to the US dollar. So this level of volatility, it's not consistent with the 3 main functions of a currency. So basically, store of value, unit of account, medium of exchange. As a result, our monetary board issued a resolution in 2023 stating that the only legal tender in Ecuador is the US dollar.
Interesting. Phil, how's that? I didn't manage to read the white paper sent to me this morning on your fintech strategy, but it's very comprehensive. So, so maybe talk about it now.
Well, in our case, we acknowledge as a central bank that we cannot ignore the innovative wave that is reshaping our industry. Fintech innovations have been very much pronounced in Eswatini, especially in mobile money, mobile banking, digital payments, have made access to financial services, especially to the underprivileged, the unaccessed before. We have seen banks very, very innovative with their payments systems and capability, and this has driven the financial inclusion that I spoke about earlier on. So we do embrace innovation, and we have seen, as I've said, mobile money being introduced. I recall that when mobile money came, it was during the times of M-Pesa up in the East Africa. In the South, this was like a no-go area. And I was at the central bank at the time as an assistant governor before I left the central bank to industry. Now I've come back as a governor. I remember embracing this, and we said, we don't fully understand, but let's have some guidelines, how it's going to be rolled out. And I'm pleased to say that that bold step of allowing mobile money, accepting it in the system, now it is regularized. Now there are guidelines. We've even moved to a step of enhancing our payment system and payment capability and payment law because we were bold to embrace innovation. What the central bank has also done in a line of embracing fintechs, we've introduced sandbox regulatory platforms within the central bank where innovators come in, they try their products, and they are in a safe space. We learn from them, they learn from us, and then we roll them out. And I'm happy to say that through this process, which was introduced around 2018, we've already produced a fintech that has already rolled out a capability that connects non-banks and banks in terms of interoperability. And just recently, we've just also sanctioned another fintech that is going into blockchain payments. All these are innovations that we are adopting because we are realizing that technology and innovation is here to stay. We have also looked into this issue of digital currency. I don't want to call it crypto because as a central bank, we developed what we call a central bank digital currency backed by the reserves, backed by the central bank. We went through an intensive research to see how this can benefit the country, how can it replace fiat money. We worked with a technical partner. And there's some few lessons that we learned there, which I would like to share. At this point in time, we have sort of parked it at a research, but not yet rolled out. But some few lessons that I want to share. One is that it is very important to have preparedness, especially of the participants. They must all be at the same wavelength. Number two, testing time to allow more use cases is very, very important. And the third one, the issues of offline use case and also to enable a wider geography participation. We have realized this. And then lastly, we are seeing central bank digital currency relevant, especially in cross-border payments. But in our case, we have realized that it is not going to enhance in any way or form the issues of financial inclusion, because as I've said, the banks have taken quite a landslide in that regard. So where we are now with embracing fintech, we certainly believe it is an enabler, especially in the payment space. It reduces cost, makes banking affordable, accessible, and these fintechs and these capabilities we need, and it is the banking of the future. And we cannot, as a central bank, rely and say, and let the commercial banks run ahead of us whilst we are regulating them. We need to speed up and be ahead of the curve equally so. And I'm happy that we are working not just in isolation, especially in our common monetary area. We are working as a block so that we can come up with a collective solution.
Does anything concern you about the rise of fintech when you're a central banker and you're thinking about the innovation technology that's coming? Or is it all exciting, Martin?
Well, I take a posture as a central bank governor that we are in an information age. We are in AI. If you look at what banks are doing, it's amazing. How they are adopting AI, how they are using it in terms of their customer service, their scoring methodology for credit, et cetera, et cetera. So I think as central banks, we need to be alert to this and we need to respond. Whilst we remain true and core to our mandate of price stability, financial stability, contribute to economic growth, manage reserves, stable financial system, secured cyber security, we need to do all these things and not place the economy at risk. And that's why we find the sandbox to be very ideal for us, because we give space to these innovators. It is a secured environment. By the time we roll them out, we know the full parameters. And maybe just one comment with regards to virtual assets and what we have done. We are looking into this. We have worked on a paper and a regulation, and we are seeing how do we pronounce ourselves. At this point in time, we are monitoring, it is happening, but it's not fully regulated by the central bank.
So sandboxes. Do you have a sandbox, Martin?
We do. We have several initiatives that are rolling out, but we don't have the results as impressive as the colleagues have. I think returning to your question on digital assets and what worries us, I think a couple of points, because now we're trying to regulate the crypto asset space, and we're following the European Union's approach to that, which is basically tells you a couple of very important things, which means same risk, same regulation for all the players in the industry. The second thing would be the travel rules, so traceability, because when we did our own homework and then we studied how our commercial banks are engaged with people or businesses on crypto, we saw that there are very disturbing signs there. So there will be instances of tax evasion, there will be instances of criminal behavior, and so on and so forth. So what bothers me is that we need to keep the balance, but we need not to be super excited about everything, so we need to take care about the business as well.
Makes sense.
Well, I have one final question, Jessica, if you allow me. At the Central Bank of Ecuador, we are completely committed to financial and monetary innovation. Our monetary board has approved a regulation on how to conduct a sandbox in Ecuador. In fact, the president of Ecuador's monetary board, Tatiana Rodriguez, will discuss tomorrow in a different panel here at the summit, our bank's regulatory approach to fintech and payment systems. However, a key goal of the Central Bank of Ecuador and our board as well is to ensure monetary and price stability.
Brilliant. Very interesting. We're going to pivot a little bit to talking about innovation around policy making. Martin, the Central Bank of Armenia has a new policy framework, FPAS Mark II. Be great maybe to touch on that, and then for the others to come in around how you think about innovation around policy making with the emergence of new technologies, such as we've just mentioned.
So FPAS, thank you for that question. I think I've talked about it first time probably 2 years ago at the IMF Governor's talk. When we start developing the framework, we discussed it with several people in the field like John Taylor, Larry Summers, and some others, Charles Goodhart being one of those. We got very positive feedback that's encouraged us to go. So it's technique that we use to do our monetary policy, because we're living in the times of extremely high uncertainty, and then many central banks use just one line, which they call baseline, to forecast the future, taking into account all non-linearities in the world. We at the Central Bank of Armenia understood the limitations of that approach, and we tried to systematize and institutionalize what Alan Greenspan in 2004 called risk management approach to monetary policy making. So it's about being completely transparent to general public and economic agents. So I'll give you an example. After each meeting at the board level, we don't only publish the central bank interest rate, but we also publish attributed minutes. We also publish each votes for each single individual board member, and then one pager from each single board member telling their thinking behind their decision. So this FPAS Mark II gives you an opportunity to interact with general public to build the credibility. Because from my perspective, credibility is the asset that central banks possess, and it's a non-linear process. You can build it for many, many years, but you can lose it immediately. If you are behind the curve, or if market doesn't understand your decision-making process. I think many developed world central bank were spoiled with that credibility capital or equity that they have gained through so far. Emerging markets or developing countries' central banks are much more prudent in their behavior from my perspective, because we are severely punished for not obeying the rules. That's why I think this approach, which we start following January 2024, from my perspective is a novel approach that would give away and boost for the others as well, hopefully.
Phil, do you have a particularly novel approach there?
Yeah, first of all, I want to commend Martin, because what he's doing is bringing the central bank functions into the public. Transparency and effective communication of monetary policy is becoming paramount, so that we are fully understood as a central bank what we are doing and how to arrive in the policy issues and the decisions that we take. So I think it's definitely something that we have been watching, and we have seen other central banks adopting, and we have similarly done the same. In the past, we also just issued our monetary policy statement, what caused the movement in the interest rates, but now we engage the media, and they interrogate us, and they challenge us, and they ask other issues. And of course, in most cases, they move to fiscal issues, which have got structural issues instead of just monetary policy. But we are called upon to explain ourselves and still remain independent advisor to government. What we have also done in Eswatini in terms of creating this transparency is introducing a risk-based approach, which requires institutions to be accountable, to conduct risk assessment, identify risks, and also implement appropriate measures. So this is one way that, what the central bank is looking for from the commercial banks or the regulated entities is very transparent and fully understood upfront. And this is all intended to mitigate any potential or inherent risk that could be posed into the economy.
Well, in Ecuador, we have been able to develop a macro-financial framework with the support of the IMF. We are working together with the Treasury, the Ministry of Finance, and the Central Bank of Ecuador to basically develop forecasts and models for the four main sectors of the Ecuadorian economy: the external sector, the monetary and financial sector, the real sector, and the fiscal sector. So we are basically developing models to understand and forecast the situation of the Ecuadorian economy, and basically we are providing technical advising in case if required to the national government as well as the National Assembly to make sure that we are achieving a good level of economic growth as well as price stability. And it has been, very helpful process, since we now have a clear picture of the Ecuadorian economy, and we can make proposals to avoid recessions or to guarantee financial and monetary stability.
Very good. So we've got 4.5 minutes left, which is time for the most rapid-fire Q&A ever. Does anyone have any questions for the governors? Just at the front. Hang on 2 seconds for the microphone, thank you.
Hi, David McGrory from Denton's. I was interested in the comments about making board minutes available and attributing comments to each individual, which I think is laudable. But I was curious to understand, do you think that that's changed the way that people approach those meetings and what they say at those meetings?
So thank you very much for the question. I think before moving to answering to your question, I need to make it clear that every board meeting starts with a discussion of varieties of scenarios. So there will be a set of scenarios which are more hawkish than the market, and there will be a set of scenarios which are dovish than the market. That's why each single board member should take a stance towards those scenarios. That's why attributing and publishing their ideas and their way of thinking gives market much more info on how decision was made. That's the whole approach to this, moving away from one baseline, which basically is always wrong. And nobody can predict the future. So that's why you are working. And then sometimes people think that it's a discretion, but it's not, because there is a full set of modeling and all the expertise behind each of the scenarios. But contemplating with whatever would happen would give you a broader understanding of things. And if I can give you just one example, that would make things even clearer. So we had a board meeting on February 26, 2022, 2 days right after Russian-Ukrainian war started. And then our proximity with Russia were very much interrelated with Russia. And there were 2 scenarios at the board meeting. One, that Armenia will be severely hit negatively because there will be a negative demand shock from Russian economy. And second thing, that because of the war, many Russians would leave Russia and come and settle themselves in Armenia. Both were plausible, and making a decision through one baseline would have been impossible. That's why some board members took one position, the others took the other position. But it was told to the public how we think about the things. And that made clear to them.
Any other questions? Second row in the middle.
Hi, my name is. I have a question for you from the emerging market. I work for a bank, and as practitioners in banking space, we tend to feel like central bankers make it very difficult to come to the market. But from the conversation that happened today, the sentiment is that central banks are open for innovation and for players to come into the space, especially in SADC and maybe East Africa. What do you think as practitioners can make it easy for central bankers to accept the kind of innovation that we want to bring into the market? Thank you.
Thank you for the question. Well, I will speak contextually with regards to Eswatini. Just to demonstrate that we are serious about innovation and technology, in 2016, we set up a Fintech and innovation unit. It's now capacitated. We have got skilled people, engineers, people that are more knowledgeable and are tech savvy. Because traditionally, central bankers are known to be conservative, to be closed. It's a closed book. What is the regulation? Even when you come to apply for a license, it's a whole lot of issues that you need to go through before you get through the gate. So by creating this capacity, having the Fintech department within the central bank has demonstrated our openness to innovation and technology. So what I would encourage people, those innovators, ideas that are there, as I've already said, we have seen quite a number of applications that come through. We check the validity of the business case. What is the solution that you are presenting? How is it going to benefit the economy? Are there any risks that we identify upfront? And if so, we then deal with these issues. And whilst you walk through the journey of the sandbox that I've spoken about, we help to understand you better, and we reshape, reorganize whatever concept idea that you have. So my view would be, I mean, by the way, we are grateful for such a conference as this, because it's cross-pollination of ideas. While central banks need to be open, but we mustn't place our economies at risk as regulators. Whilst we need the innovators, but they must be done for the good of the economy, for the benefit of the nations. So that's how we are working with the various fintechs, and we are very, very open, and we have got results that we are already speaking about. And it's been very transformational, and have created a different competitive landscape within the economy, especially reducing the cost of banking, which is what central banks want to see.
Fantastic. Well, my role as a moderator is time person, and we're out of time, sadly. It has been a total pleasure spending time with the three of you today. I feel very excited about innovation coming forward with the three of you behind, making sure that we don't do anything too silly. And I'm sure there'll be lots more questions, but hopefully people can speak to you afterwards. Thank you again.